Everyone, hopefully, you're all having a wonderful day and having a great weekend. And today, I'm just back with another video and another trade and week's recap. So, this week was a decent week for me where I made close to $130 in profits. And the other thing about this week was I took three break-even trades. Now, do stick around till the end to see why I exited at break-even and not let it run. So, let's get into the video. So moving into my first trade, which was on 24th of March in 1945, 1915 was my entry. And this was in Aussie, AUD USD. My bias on this trade was bearish. Now, well, as previously, same as last week, after we saw this nice little correction from here, the trend was a downtrend, and I could see some sideways action forming over here. And this, I thought it to be a flag and pull. So if you come down to hourly time frame, this looked like a flag and pull to me. So there was a downtrend and then a flag and pull. After which, on my 15-minute trading time frame, I could see a breakdown of this flag and pull as well. So, well, after seeing this breakdown, the first thing which I went ahead and looked at is my volume, and my volume was really good on this. There was a nice little spike on the volumes, especially on this bearish breakdown candle. So, after looking into the volumes, I decided to enter on this trade with stop loss about this high. My stop loss about this high, and my target as this recent low. So I decided to enter on a 1:2 restore ward ratio. So I decided to place my order around this level. I got my entry on this candle, and then immediately the very next candle took my stop loss as well. So after taking this loss, I was still not convinced on being bullish. I was still bearish. My bias was still bearish. I was not going bullish on this as of now. So after waiting for some time at 21:15, I decided to go bearish again on this candle. So the reason why I decided to go bearish on this again, with this as my confirmation candle, was that so we can see a fake breakout, fake breakdown. I'm sorry. So fake breakdown. So this was a fake breakdown. So this was a fake breakdown over here, and then price again closed below it. Now essentially what this means is that this is nothing but something like a retest, you could say. So then why would I say retest is because okay, first thing, this was the breakdown, and then the price went back inside and again came back down. So this is like a breakdown and a retest and then a back down again. So with that reasoning, I decided to go bearish again on this with this candle, and my volume again on this particular candle was really good. But now if you look at this, my target is very close. But despite that, I decided to enter. So by adjusting my entries, I got a really good risk to reward ratio around 1:2 again, and I waited patiently for my entry. And I believe I got my entry on this particular candle, right at the high of the candle. I got my entry, and the next candle I got my target. So if you want to look at the trade, I'll just post in the trade screenshot as well. So on this trade, I booked around $100 profit. So that was it for 24th of March. Now moving into 25th of March, where I entered on two trades. Both were in Euro USD. Now you can see this, the net PNL like around $3 and $8. So this is a very small amount. So essentially what this means is I exited at break even. So let's get into the trade why I exited at break even price. So the first trade which I took was in Euro USD at 16:45 on 25th of March. Right. So this is where I decided to take a trade. Okay. So if you see over here, my bias was confused. So I was a little confused and skeptical on what to go. Do I go bearish or bullish on this trade? But I was confused about being bullish. I wasn't sure about being bullish. That is what confused means here. So this was the candle which I entered, and I think the reason why I entered was again a break and a retest and again a break. So similar to the previous trade, a break and a retest. So this is why I entered. And now, so why did my bias change to bullish? Okay, so the reason why I changed my bias to bullish was that on my hourly time frame, I can see a double bottom over here. So this was a double bottom in my hourly time frame. So after seeing this double bottom, I decided to go bullish on this. Again, there was a downtrend, a double bottom. Usually, this double bottom means a trend reversal. So in 15 minutes, I saw a break and a retest. So with this, as my setup, a break and a retest, I went bullish on this trade. Now this time my target was pretty big. This was my target on this trade, and since I had a really good risk to reward on market itself, so I decided to take a market order for this. So this is where I entered on the market order. Now, if you look at my exit on this particular trade, I closed this trade at around 1915. So when I go forward in chart to 1915, so this was where close to roughly about where I closed my trade. Yeah. So if you look, I closed it around 1915. So I closed it over here on this candle. I'm not seeing any good solid follow up to this candle. Now you could say maybe this is a good follow up candle, but no. If you look at this candle, it's really small compared to this candle. I want the follow up candle to at least be of the same size or bigger size of as this candle. So this candle is pretty small, and the volume on this candle as well is not good. It's below my mean, the volume mean. So that's the reason with that. I was just waiting to see if I get any follow up. This candle gave me hopes, but then again it wicked out and came back down inside. So that's the reason I decided to exit this trade at break even price itself. And then if you look at my entry for the next trade, it was 1930, immediately after this. So immediately after this, I changed my view to bearish. Now, no, the reason why I changed to bearish on the very next candle was because, see, this candle over here has done a fake breakout. So previously, what happened was a break and retest, but this time it has done a fake breakout. So what a fake breakout means is that this was a breakout candle. So this was a breakout candle, and then the price came back inside within the resistance zone to give a fake breakout. So with this, I've decided to go bearish on this trade on this candle with a stop loss this time above this and my target as this low. So my bias on the previous trade was actually wrong. So I wasn't supposed to be bullish on this instrument as of now, despite this double bottom. So whatever you saw this bounce was just a bounce or a bounce to just short it again. So if you go and look back, every time there was a bounce, people kept shorting it. Bounce, short, bounce, short, bounce, short, bounce. So most likely it's a short again. So with that, I went bearish on this trade. Now I did get my entry on this candle, and then I waited patiently. And I think I closed this trade as well on break even. But if you see, if you look at it, and the reason why I wanted to close this at a break even price is because I didn't want to leave this as an overnight position. So if you go forward and look at the chart, price did actually give me my target. So this was the target, and price did give me my target over here by the end. So this was an overnight position for me, and I didn't want to take the risk. So I ended up exiting this trade. I ended up closing this trade at 22.30. So I ended up closing this around at this price over here. Again at break even. But if I would have left the trade, it would have given me my profit. So yeah, that was all for 25th of March. So moving into the next day, which was on 26th of March, I took a trade in AUD/USD, which was bearish trade. So this was the trade on AUD/USD. So again, my bias on this instrument was also bearish. Now, why bearish was because in 4 hourly time frame, you can see again a nice downtrend and then a bounce. So any bounces were short for me, and especially when you have a chart pattern at that bounce. So here you could see a double top over here forming. So this was like a sort of a double top with a fake breakout setup. So with that conviction on my 15-minute time frame, I decided to short on this candle. Now people might ask, why wouldn't you short at this candle? Why would you short at this candle? So there's a thing always. So whenever so especially when there's a nice momentum going on upside, usually the first fake breakout might fail. Usually the first fake breakout might fail. So it's better to wait for a second fake breakout or probably a retest of this level again, this double top level again. So this is oftentimes this work when it retests the second time it works. The first time it might wick out like this. So if you would have put your stop loss above this candle over here, then your stop loss might have been wicked out by this inverted hammer, and then price would have come back inside. So I waited for this candle and I ended up shorting on this candle. Now I didn't exactly short on this candle as I wasn't in front of my charts. But when I came back, so this is where I saw a nice bounce or a nice correction. So I picked up I got my entry at around this level, somewhere over here. So I ended up entering somewhere over here with a stop loss above this and target as this low over here, somewhere over here. Yes. So I entered this trade with this entry price and my target around this level over here. So you can see the trade played out really well. The trade played out really well, and I got my target as well. So I booked close to $85 in profit for the day. So that was all for 26th of March. Now moving into 20th of March, which was in Euro USD. So on 20th of March, I took a trade on 2030. 2030, 28th of March. So this is what. So this was on Friday, which was the final trading day for the week. If you look at this trade, it was a very similar trade as my first trade of the week, which was a break and retest. Now, I was bullish again. My bias over here was bullish and not bearish. So the reason why I changed my view to bullish over here is because you can see a downtrend and then I could see a chart pattern here. So any chart pattern, in fact, inverted head and shoulder, double top, double bottom, these are like trend reversals. They usually change the trend. So I could see a head and shoulder pattern forming over here. This was a head and shoulder pattern which formed over here. And there was a breakout as well. So on my trading time frame, 15 minutes time frame, when I saw the breakout and then a retest with another bullish candle. Now this is a good follow up to this candle. So these follow ups like almost equal size or a little bit bigger also works. These are good follow ups which I generally like to see. And if you look at the volumes as well, volumes are good. It is above the mean volume mean. So I decided to enter on this trade with my stop loss below this. You could say a high wave candle and the target over here. The target being this rejection level. I entered on a 1 is to 2 risk to reward ratio. If you observe, I got my entry, but then on the chart it shows I got stopped out here. But I booked my trade at break even. So I booked $0.42 of profit now. Well, that is essentially is nothing but break even. Now, why would I exit at a break even level is because break even price is because I'm not seeing the price action which I want to see. What I wanted to see was a strong upward trend, or at least this candle over here, this candle. I wanted to see this candle close above these candle highs. So what I wanted to see was this candle close above these candle highs over here, this candle high and this candle high as well. But that didn't end up happening. So it closed below these highs. So I wasn't convinced with the price action which was forming, and I decided to exit the trade at the break-even price. So that was it for the week. These was the trades for the week. These were the trades for the week. And if you look at my weekly PNL, I'm up by close to $130 for the week. Out of the 6 trades which I took, 3 trades I booked at break-even. And in those 3 break-even trades, 2 would have hit my stop loss and 1 would have hit my take profit. I believe it is good sometimes to book your trades at break even. The reason being you're not seeing the price action which you want to see. If the price action is not convincing, or maybe it is showing you more of bearishness than bullishness. So let's say you would have taken a bullish trade and you're seeing more bearishness than bullishness. I feel it is better to book your trade at break even. Or let's say there's a very high impact news or a red folder news, then it's better to book your trade at break even or whatever the PNL is showing. So let's say you're up by maybe $50 or like 1:1 or 1:0.5. So just book it, and because you never know what the high impact news might do. It might work out on both the sides, right? So I hope you all enjoyed this weekly trade recap, and do subscribe and like the video. I hope you all have a great weekend. Thank you for watching, and I'll meet you in the next week.